So we are entering a new era of wealth preservation. Everything is changing. The way business owners build wealth, the way they pay taxes, and the way they secure their financial future. We're experiencing what financial insiders call the great wealth transfer, a seismic shift where smart business owners are no longer focused on just making money, but on keeping it through what I call tax-sheltered investment vehicles. While 99% of successful business owners focus solely on income, the top 1% have quietly implemented a fundamentally different approach. One that's helping them legally save hundreds of thousands, even millions in taxes each year. What if I told you that the tax code itself contains hidden provisions designed specifically for business owners to completely eliminate taxation on investment growth, not just defer it, while building substantial wealth outside the volatile market system? In the next few minutes, I'm going to reveal why traditional tax advice is costing business owners millions and how you can position yourself on the right side of this wealth preservation revolution. So if you're watching this right now, you're likely at point A. You're a successful business owner or a high-earning professional experiencing one of these frustrating tax situations. First, despite following your CPA's advice religiously for years, you still watch 30 to 40% of your hard-earned profits disappear to taxes each year. The more successful your business becomes, the more painful your tax bill grows. Or second, you've done everything right. Maxed out traditional retirement accounts, claimed every possible deduction, maybe even paid for expensive tax strategies, but yet you're still bleeding money to taxes with no end in sight. Or third, you're storing business profits in corporate accounts that are constantly being taxed in the highest tax brackets, creating a significant drag on your wealth building potential. I understand these frustrations because we have thousands of business owners every month who apply to work with us, who are exactly where you are now. Business owners just like this pharmacy owner in North Carolina who was watching over $100,000 vanish to taxes every year despite following conventional tax advice. Or this anesthesiologist in her 60s who realized that following traditional retirement advice would have cost her over $1.2 million in unnecessary taxes. And here's the uncomfortable truth about why this happens. Most CPAs are trained in compliance, not wealth preservation. They're experts at following tax rules, not at leveraging the tax code to reduce your tax burden permanently. They're focused on temporary deductions that might save you some money this year, but do nothing to address the long-term tax burden on your wealth. And what's worse, many solutions they recommend actually create bigger problems. When your CPA tells you to buy depreciating assets like equipment to get a write-off, you're spending $100,000 to save $35,000 in taxes and losing $65K in the process. Traditional retirement accounts lock up your capital until you're in your 60s or 70s and still subject that money to taxation when you withdraw it. So if you're at point A, successful, but watching too much of your hard-earned income vanish to taxes, let me show you how the top 1% have been quietly building and preserving their wealth in a completely different way. So I call this the tax savings report card. I'm going to show you exactly how different approaches measure up on the metrics that actually matter to successful business owners in saving on taxes. So let's examine the 4 most common approaches to reducing taxes and see how they really perform on 6 key criteria. So immediate tax impact, so actual dollars saved in the current year. Long-term tax elimination, so not just deferral, but complete elimination of tax on capital value growth. Growth potential, so the rate of return on your capital. Capital access, so the ability to use your money when opportunities arise. Asset protection, so security against market volatility and creditors. And legacy efficiency, tax-free transfer to the next generations. So strategy number 1 is maximizing deductions and write-offs. In terms of immediate tax impact, there's some immediate relief, but it still requires some money in order to get that. In terms of long-term tax elimination, there's really no impact on future tax burdens, pretty much inexistent. Same for growth potential. Money is spent, but not invested. Same for capital access. The money is gone forever once you invest in that depreciating assets. And same thing for asset protection. There's really no assets to protect. Same thing for legacy efficiency. There's nothing to transfer. So to go back to the original example that I shared earlier, if a business owner is spending $100K on equipment to save $35 in taxes, they're still losing $65,000 in the process. And that equipment depreciates in value every year. So that's not wealth building. That's just slightly less painful wealth destruction. Now, strategy number 2, we've got the traditional retirement accounts, the 401ks, the IRAs. terms of immediate tax impact, it differs rather than eliminate taxes. In terms of long-term tax elimination, well, it's eventually going to be taxed at distribution. In terms of growth potential, it's market-dependent growth with limited contribution caps. In terms of capital access, there's penalties for early withdrawal. Asset protection, there is some protection, but it's still subject to the market risk. And finally, legacy efficiency, well, the heirs pay taxes on inherited accounts. So the overall grade is not as good. So consider this. If you max out your 401k at 20.5k per year for 20 years and achieve 8% growth, you'll have about $900,000. But at 35% tax bracket, you lose over $315,000 in taxes when you withdraw it, which is money that could have stayed into your family. Now, strategy number 3 is real estate investments. In terms of immediate tax impact, there is some write-offs through depreciation, so it's not that bad. In terms of long-term tax elimination, there's an eventual recapture of that depreciation. In terms of growth potential, it's pretty good. Market-dependent appreciation. In terms of capital access, well, this is highly illiquid since it's real estate. Asset protection, obviously not that bad. Physical assets have inherent protection. And legacy efficiency, the step-up basis helps, but still has complications. So real estate can be powerful, but it requires significant expertise, active management, and tied up capital. Plus, many real estate investors still face substantial taxation on rental income and capital gains, which takes us to strategy number 4, which are tax-sheltered investment vehicles. In terms of immediate tax impact, well, it's strategic restructuring for immediate tax reduction. In terms of long-term tax elimination, in many cases, there's a complete elimination of your taxes on capital growth. In terms of growth potential, well, it's a consistent, predictable growth independent of the markets. Capital access, well, you have access without any taxes or penalties to all the capital you invest. Asset protection, well, it's protected from the market volatility and the creditors. And finally, in terms of legacy efficiency, well, it's 100% tax-free transfer to your heirs. This is how this pharmacy owner client was able to immediately cut his tax bill by more than 50% while simultaneously building wealth that grows completely tax-free. And it's how our anesthesiologist client is now saving over $1.2 million in taxes while securing her retirement. So when you look at this objectively, it becomes clear why the ultra-wealthy have been using tax-sheltered investment vehicles for centuries. It's not about avoiding taxes, it's about legally structuring your wealth to minimize tax burden while maximizing growth potential. So the truth is, these strategies have always been available in the tax code. They're just not widely known or implemented because most tax professionals or CPAs just aren't trained to use them. Now, let me address the 4 biggest concerns I hear from business owners just like you who are considering this approach to reduce their tax burden. So number 1 is, I already have an accountant who helps me with taxes. And I completely understand that. And virtually every client we work with starts with this exact concern. But here's the critical difference. Traditional accountants are focused on compliance and finding deductions, which often means encouraging you to buy depreciating assets just so you can write them off. What we do instead is help you invest your money in those tax-sheltered investments that appreciate in value year over year, and you're not taxed on that growth. Instead of buying depreciating assets, you're building wealth that grows tax-free. So your accountant is still valuable for compliance and business operations, but we complement their work by focusing exclusively on wealth preservation strategies that most accountant professionals just aren't trained to implement. Which takes me to concern number 2 is, what strategies do you have that I don't already know about? And this is perhaps the most important question. What makes our approach different is specialized tax-sheltered investment vehicles that provide 3 unique benefits. Number 1 is its tax advantage contributions that reduce your current tax burden. 2 is tax-free growth on your investments, no capital gains or income tax. And 3, it's tax-free access to your wealth when you need it. So these aren't new or untested strategies. Again, the ultra-wealthy have used them for centuries. The difference is in how you structure and implement them, specifically for your own financial situation and for the business that you have. For example, one of our most powerful strategies involves a specialized premium finance estate planning solution that creates immediate tax advantages while building long-term wealth. Something one of our pharmacy owner clients used to cut his tax bill by 50%. So these aren't strategies you'll find in typical financial planning books or from conventional advisors because they require specialized knowledge to implement correctly. Concern number 3 is, how are your consultants compensated if you don't charge upfront fees? Which is an excellent question that gets to the heart of aligning interests. And our financial consultants are compensated directly by the financial institutions where your money is invested. So this creates perfect alignment with your goals because our consultants only get paid when you implement the strategy. So the more you invest, the more you save on taxes, the more your wealth grows. So everybody wins. So we have vested interest in your long-term success, not just a one-time transaction. So this compensation structure allows us to provide high-level financial consultation without charging the $10,000 to $50,000 strategy fees that most tax consultants require upfront. So the institutions pay our consultants because they gain a valuable long-term client, which is you, and you benefit from sophisticated tax strategies without paying expensive consulting fees. Concern number 4, I haven't filed my taxes yet, so I don't know exactly how much I owe. And that's actually not a problem at all. While we can't always change what you owe from the previous years, we can dramatically impact what you'll owe in the future. And the best time to implement these strategies is now. Before another tax year passes with unnecessary payments to the IRS or the CRA, the sooner you implement these strategies, the more years of tax-free growth you'll experience. Many of our clients come to us after a painful tax season, determined to never write such a large check to the government ever again. Or others are more proactive, implementing our strategies before their business growth puts them in an even higher tax bracket. Now, let me show you how simple the implementation process actually is. So step 1, it's a free 30-minute assessment. One of our elite financial consultants in your area will analyze your current tax situation and identify specific opportunities for tax reduction. So this takes just 30 minutes of your time. Then step 2, you're gonna get a custom strategy development. So we create a personalized tax sheltered investment strategy tailored to your specific situation. Step 3, it's a zero-fee implementation. Unlike traditional tax consultants who charge hefty implementation fees, most of the time we handle the entire setup process at zero cost to you. And in most cases, there are no upfront consultant or strategy fees. And finally, step 4, it's an ongoing optimization. So as tax laws and your financial situation evolve, we continuously refine your strategy to ensure maximum tax advantage year after year. So the entire process requires minimal time commitment from you, typically just 1 or 2 hours total before you start seeing significant tax savings. Now, let me show you exactly what this looks like in practice through real results from business owners who were once exactly where you are right now. So case study number 1, we've got a North Carolina pharmacy owner, which to protect his privacy, we'll call him John, which he built his pharmacy to an impressive $4 million in annual revenue, but found himself writing checks for $100,000 to the IRS every year. So after implementing our premium finance estate planning solution, which is one of the tax sheltered investment strategy, well, he saw immediate impact, which was a tax burden reduced by nearly 50%, saving $50,000 annually, just like that. Long-term benefit, well, we were able to restructure his assets for tax-free growth potential. Implementation time, just 2 meetings totaling less than 3 hours of John's time. In additional benefits, we're able to create a legacy for John where he will benefit his family for generations. So here's what's truly remarkable. John continues to run his pharmacy exactly as before. Nothing changed in his day-to-day operations. The only difference is that now he's keeping an additional $50,000 annually that would have gone to taxes otherwise. Case study number 2, anesthesiologist near retirement, we'll call her Maria, where she was making a substantial 6-figure income, but realized at age 60 that she had virtually no retirement savings and couldn't afford another market crash. Using conventional retirement accounts, she would have paid over $1.2 million in taxes if she maxed them out for her remaining working years. After implementing our tax sheltered investment strategy, she was able to see projected tax savings of over $1.2 million over her retirement. She was able to see a complete elimination of market risk, and she now has full liquidity without tax penalties on her capital. Again, implementation effort, less than 4 hours of her total time. So Maria is now on track to build substantial retirement wealth in her remaining working years without worrying about market crashes or tax rate increases destroying her nest egg. Now, case study number 3, 2 partners with a security services company generating $5 million in annual revenue were uncertain about their retained earnings strategy. So after implementing our comprehensive cash flow restructuring plan, they saw immediate 9% reduction in their annual tax burden. In terms of additional individual retirement account room, they saw 13.5K annually through strategic income restructuring. In terms of projected wealth increase, they saw $750,000 in additional retirement wealth. Again, implementation timeline, just 1 month from the first meeting to the complete setup. Their business continues to thrive with enhanced liquidity reserves, and their retirement is now fully secured, and they have complete clarity on how their wealth will grow. These aren't isolated examples. We've helped hundreds of business owners across diverse industries implement these strategies. The common thread, they were all following conventional financial advice, but still losing massive amounts to taxes. So by switching to our tax-sheltered investment approach, they've permanently changed their financial trajectory, and it didn't require them to change anything about how they run their business. Which takes us to case study number 4, and the last one that I'm going to share today. It's a commercial cleaning company owner, which we'll call Paul again to protect his privacy. So Paul had grown his commercial cleaning enterprise to $2 million in annual revenue, but despite his business success, he faced a frustrating reality that most of you are probably facing right now: $40,000 vanishing to the IRS annually, while his retirement accounts remained virtually empty after 15 years in business. So after implementing our owner-only 401k with integrated cash balance strategy, so he saw complete tax elimination, so a complete removal of his $40,000 IRS obligation, plus recovery of $12,000 through strategic carryback provisions. In terms of wealth accumulation, and established $158,000 in annual tax advantage contributions across family members. He was also able to unlock $180,000 in accelerated depreciation through engineering-based cost segregation studies on his rental holdings. In terms of financial security, well, he's incorporated permanent life insurance within the qualified plan structure for both tax advantage and family protection. So now what sets Paul's case apart is by leveraging the unique fact that only family members, so himself, his wife, and son, were on payroll. He designed a specialized combination of qualified plans that transformed tax obligations into wealth-building opportunities. So the integration of cash balance components with traditional 401k features multiplied his allowable contributions far beyond standard limits, while the property strategy created substantial additional deductions with minimal effort. So by retirement, Paul's redirected tax dollars are projected to grow to $3 million in family wealth, all because he discovered how to legally transform tax obligations into personal assets. So at Preserved Wealth Group, we've built a network with hundreds of elite financial consultants, the top 0.01% in North America, who specialize exclusively in implementing these tax-sheltered investment strategies. With a combined 800 plus years of experience, our consultants have helped business owners and professionals save millions in taxes while building substantial tax-free wealth. So this is how you get from point A to point B. Point A, well, watching 30 to 40% of your profits disappear to taxes each year, using strategies that at best defer your tax burden to the future. And point B, which is legally reducing your current tax burden while building wealth that grows completely tax-free, creating financial security that doesn't depend on tax rates or market performance. And unlike traditional tax advisors who focus on temporary deductions or CPAs who concentrate on filing or only compliance, we specialize in permanent tax reduction through strategically structured investments. And here's what's truly setting us apart. We very rarely charge upfront consultant fees, strategy fees, or legal fees to implement these strategies. Our consultants are compensated through the financial institutions that manage your tax-sheltered investments. So if you're a business owner or a high-earning professional currently paying at least $35,000 annually in taxes, here's what I invite you to do. Apply today for a free consultation. In the description, you'll see a link below where we will assess your current tax situation, identify specific opportunities for tax reduction, show you exactly how much you could save over the next 5, 10, and 20 years, and explain the implementation process and answer all of your questions. So there's absolutely no obligation and zero payment required on your end. We simply want you to know that's what's possible when you work with financial consultants who actually understand how to reduce your tax burden permanently. So everything we've covered today is based on strategies we've seen work across hundreds of clients. But it's important to know that your situation is unique. This video isn't personal financial advice. Our consultants will walk you through what applies to your specific case during this free assessment. So the process starts with a simple application to connect you with someone in your area. So just click the link below this video to get started. So now there are 3 paths forward from here. Path number 1 is to do nothing and stay at point A, right? Where you are right now, continuing to follow conventional tax advice and watching 30 to 40% of your profits disappear each year. The cost of inaction is often the most expensive choice of all. Path number 2, well, is to try to implement these strategies on your own, spending countless hours researching, possibly making costly mistakes, and likely missing key opportunities that only specialized consultants would recognize. Or path number 3, which is to take the efficient approach and leverage the expertise of specialists who implement these strategies every single day to business owners just like you, saving both time and money in the process. I want you to consider this. Every dollar you overpay in taxes is a dollar that can grow your wealth. So if you're losing $50,000 a year in unnecessary taxes, that's not just $50,000 gone. Over 20 years, that adds up to more than $2.3 million in lost compound growth at just an 8% return. That's the real cost of staying at point A. So our calendar fills up very quickly because we work with clients who genuinely qualify for these strategies and who don't want to wait until the next tax season to realize how much they could have saved. So take 2 minutes right now to apply for your free consultation by clicking on the link below. And remember, this isn't about avoiding taxes. It's about legally structuring your wealth to minimize tax burden while maximizing growth potential. It's what the ultra wealthy have been doing for centuries. And now it's available to business owners and professionals just like you. So apply now, today, for your free consultation, and let's see how much you could be saving.